we have a tremendous panel to kick this thing off this morning, and I think it really goes to the idea of art and commerce in a way that really speaks to what the next day is about, and to some degree what the entire weekend is about. Let me introduce to you who we have on this panel, and I'm going to start with Randy Komisar. Randy is a partner at Kleiner Perkins, the venture fund. He has a book. Come on out here, Randy. He has a book called The Monk and the Riddle, The Art of Creating a Life While Making a Living. And we're going to talk about what that means, and that's how I want to kick this conversation off. But before we do that, let me bring out the rest of the panel. Cliff Sosin is here. Cliff is the founding manager of Cass Investment Partners. And then finally, the great, the one and only, and we did this together last year, Meredith Whitney, co-founder of 10 Bell Capital. And I also want to say author of a book that everybody in this room should go buy immediately called Fate of the States, The New Geography of American Prosperity. So you have it. She's a research analyst, now an investor, and an author. Where I want to start this conversation, I think we have it behind us. Are the slides going to emerge behind us? I want to read to everybody, if you'd indulge me just for a moment, a couple of things that Randy talks about in the book to sort of tee up this conversation. And this is what you write, Randy. You write, I realized over the years that business isn't primarily a financial institution. It's a creative institution. Like painting and sculpting, business can be a venue for personal expression and artistry, at its heart, more like a canvas than a spreadsheet. Why? Because business is about change. Nothing stands still. Markets change, products evolve, competitors move into the neighborhood, employees come and go. Business is one of the last remaining social institutions to help us manage and cope with change. It, however, has a tendency to become tainted with the greed and aggressiveness that, at its best, it channels into productivity. And I want to talk about that line specifically. Left to its own devices, business may never deliver the social benefits that the other fading institutions once promised. But rather than give up on business, I look to it as a way, indirectly, of improving things for many, not just a lucky few. I accept its limitations and look for opportunities to use it positively. Finally, in the U.S., the rules of business are like the laws of physics, neither inherently good nor evil, to be applied as you may. You decide whether your business is constructive or destructive. I help people understand this and express themselves in what they do, trying to make a difference through business. A lot of provocative thoughts in there, Randy. And when you wrote this book, maybe you can just help everyone in the room understand why you decided to write this book, but more importantly, you know, in what you wrote, I see both the good and the bad, and I'm not sure where you ultimately come out about business.
So I wrote this book in 1998 is when I started this book, during the last boom, just before the last bust. This book came out in March of 2000, probably the reason it became a New York bestseller, and it continues to be a sort of a hallmark of business school education is that it came out at exactly the time that the market crashed. So people were looking for answers. The book was there. When I wrote the book, actually, people thought I was crazy because I was raining on a very, very good parade that was bringing lots of money, particularly in Silicon Valley, which is where I'm located. So, but I wrote the book out of frustration. I'd come to Silicon Valley 2 decades before to help start businesses and was enamored with the creative culture of Silicon Valley and entrepreneurship. And it seemed to be fading, and it was fading fast as the speculators and carpetbaggers were coming in for the quick IPOs and the quick turns that weren't related to the creativity that I knew. And so I wrote the book kind of as a raving passion of mine, a last call for true entrepreneurship and creativity in business.
Okay, let me ask the rest of the panel this, though. You talk about the good and the bad. Let me take the bad for a second. A lot of companies today talk about social impact. They talk about things they want to do. They say they want to do things for the community and that they have to have this inclusive approach. And yet, ultimately, we still measure most companies by their profit margin. That's what we look at. Nobody gets credit for employing more people. Their stock doesn't go higher. The CEO doesn't get more money. Should it be that way?
Well, companies are owned by their shareholders, so I would say yes, people can vote on based on an ethical driven purpose, or people can vote on a profit-based purpose. I find it ironic that when I look at so many of the do-gooder intentions that were forced on the banks by reforms forced in the mortgage industry and by all the different mortgage settlements, and the banks then advertised themselves as doing good for the communities when it was forced. The Community Reinvestment Acts that are forced on the banks then advertise they've got good intentions and they're doing good. There are institutions that by nature do what's best for the company. And I think that the fundamentals match the intentions, and they do well over time because customers vote with their feet, just as shareholders do. So those two can align really well sometimes, and I think it does over time. But absolutely, companies have to operate on the best interest of profits and long-term sustainability of those profits. And so the two should peacefully coexist.
Should peacefully coexist. Can they peacefully coexist, Cliff?
Well, you said businesses are judged on the basis of their returns for shareholders. And I actually don't think that's right. You said judged, I guess you mean by the press or something. In the end, businesses are judged by their customers. They're judged by their employees. And if you don't delight, and businesses are unique in our society in that they're for the most part, there are exceptions, but for the most part, they're one of the only types of organizations that have to bring value to everyone they touch. They have to bring value to their employees, they have to bring value to their shareholders, they have to bring value to their customers. They pay taxes, therefore they bring value to the government. And so I actually think that it's impossible for any business to make a profit without delighting, many people and being judged favorably, and there's a constant trade-off in any business between, pleasing the customer more, pleasing the employees more, and making more profit, and that balance is the judgment comes from the customers and the employees and so forth.
Right. Randy, where is that balance right now?
Well, I hear the answers from the panelists, and I certainly think that they're very smart answers in the context in which we operate. The question is, why do we operate in that context? The questions that we need to ask ourselves are much more fundamental. The idea that scale and bigness is important is something that's sort of presumed through business school and hasn't been questioned in 100 years. Why is that the case? Why is big better than good? Why is good not enough? Why is sustainability less important than profitability in the near term? Now, mind you, we have market forces that push us back in that direction, but I think that particularly people with the power and resources that are represented in this room can stand up against that. That's certainly my feeling, is that we need to question the fundamental tenets of the markets that drive us in directions that are unsustainable and that are not forgiving of the things that are important to ourselves as a culture. We can't be blindsided by becoming sort of simply automatons serving, buying low and selling high. And what sort of drove me in part to write the book was my frustration with seeing so many of the best and brightest, educated at the best institutions, coming out with the notion of maximization rather than optimization.
Well, in fairness, I think that that is a terrific long-term approach to investment, right? And so the question was, what are companies being judged on? And companies in the U.S. are required to report 4 times a year. And so we've gotten very short-term oriented. From a long-term investment perspective, absolutely, the whole notion of art and commerce is being receptive to change, which means taking risk that your investors may not understand at the time because you're seeing things that aren't clear in numbers that are just by nature lagged. So you believe in a management team, and you believe in them by making the right things, by making sustainable choices in long-term efforts for business. And I think a lot of the decisions that many companies that are struggling so much have made is to hold on to the establishment, hold on to what was in the economy for the last 25, 30 years, hoping that things are going to change, or protecting this is an obvious conflict, management protecting their own hides rather than moving on, and that's certainly seen in the financial industry, moving on and adapting to change. So clearly that's been the case in Silicon Valley. There's such an East Coast, West Coast divide culturally in how businesses approach change, and certainly I would say the financial services industry has been the most reticent to adopt change and really focus on sustainability of the models, which is why I think they're so vulnerable.
Randy, let me ask you this. You're from the Valley. I imagine you believe in innovation, and yet you also talk about sustainability. And when you think about what's going on in this country right now, and you look at the employment picture in this country, and you look about worries about the middle class being hollowed out to the extent you believe that that is the case, and some people who would argue it is technology to some degree that is doing that, and if it hasn't done it already over the next 20 years, boy, are we in for something. Where do you stand on that?
By the way, I would agree with you. I think that I think the art in business is bringing your values to business. I mean, we're not talking about the duality between the fine arts and business or doing business in order to support art. What we're talking about is bringing your values and passions to what you do. Business didn't start off as a way of a bunch of people sitting around trying to figure out how to make a bunch of money. They were making goods, they were trading goods, money became a currency that allowed them to do that better. The idea that we put the tail of the horse first doesn't make is a modern approach to business the last couple of hundred years. That doesn't mean we can't question it. And in fact, if you take a look at what's going on in the United States today, there's some 35 states that have now approved something called B-corporations. B-corporations aren't responsible to maximizing profit for their shareholders. They're responsible for a series of issues that involve community, involve employees, and the companies choose to be B Corps, and their shareholders choose to be members of that, and they serve a broader interest. If you take a look at what happens in a place like Silicon Valley, you saw Alibaba go public last week. The control in the founders in these companies is way beyond what the shareholders can ask for in terms of profit and maximization of the bottom line. They can't ask for it anymore. They don't control it. And so a lot of the reasons why you see people like Sergey and Larry at Google do that is to have the opportunity to strike that balance. So I think that the point is that technology is neither good nor bad. Just like any other aspect of business, how we apply it is important, and I think we need to think about the consequences. So jobs are a very important part of that. For instance, a lot of what I'm investing in now are businesses where I hope that we're going to be able to sustain or maintain jobs. We're being able to bring jobs to Main Street rather than aggregate them into large Silicon Valley companies that sort of dislodge jobs on a global basis. But we have to think about that as investors and as consumers.
Cliff, I think you're going to take the other side of this.
Where to begin? I think there's a lack of appreciation amongst people generally. When people think about creativity in business, they think about creating new businesses, creating new products. Really well-run companies, productivity is a consequence of creativity by people working in the business. People in well-run businesses aren't automatons in some sort of big machine. It isn't appropriate to think about a company as a big machine. Companies are really complex social organizations that mobilize large numbers of people and capital. And so I find that there's very little conflict here. I know that there's some notion that if you pay people quarterly, they behave in a short-term basis, and that there may be some truth to that, but I don't find there to be much concern that by having people in large organizations that they're going to sort of behave systematically suboptimally. And when that does happen, you're sort of thinking about a innovator's dilemma type of situation where a company has to follow its customers, and that just opens an opportunity for Randy here to come and destroy some nice investment. So the other thing I want to point out is the concern about jobs generally. 100 years ago, most people farmed. And 100 years from now, the vast majority of the jobs that exist today will be gone. And you know what? People are really smart. Again, Randy. He's going to come up with a lot of things we didn't know we wanted. And there's going to be a lot of jobs to make them or do them. And then we're all going to have them. And then we're not going to know how we lived without them. So I don't worry at all, really, about this.
If you're trusting me, we're in big trouble.
Let me just take the other side of something else you said, Randy. You promoted and talked about B corporations. At the risk of getting thrown off the stage, there are people who would argue that a B corporation is a marketing gimmick. It is a way for certain types of companies who want to raise capital, raise money, or market themselves to others, like to talk about themselves. But that ultimately, what they're doing in a B corporation, to some degree, is very much like a C corporation. And when you talk about Jack Ma, for example, at Alibaba, yes, they have a unique governance structure that is completely undemocratic, by the way. So I don't know if that's a good thing or a bad thing, given all the things you just talked about. But also, they just hauled away and walked away with billions upon billions of dollars that I'm not sure will ever get reinvested in. I mean, we don't know where that money's going. So the idea that somehow these are great, not that making money isn't virtuous. I think there's a lot of great virtue in capitalism. But to the extent that you've made the argument about this sort of virtue, I just want to push back at that.
Well, let's look at that. I mean, the issue isn't whether Alibaba is good or bad. The issue is that Alibaba put a governance system in place that makes management not accountable to maximizing profit to their investors. That's the point. And on the B Corps, perhaps there's some marketing there, but I know many of the owners of the B Corps. They're creating these companies because they do have a strong commitment to their communities and to their employees. I'm sure there's a mix. The issue here isn't whether something's all good or all bad, but the tools that we have to work with and how we deploy them. I think the idea here is that business is a set of tools. That's all it is in the end of the day. And we can use those tools to create things. What are we creating? And what are the ramifications of that? We won't be perfect in what we create. We won't have 20/20 vision as to the downsides of what we create. But we are responsible for what we create. And we can simply not excuse our behaviors because we were buying low and selling high. That's the point, that there is a creativity and an art that can be expressed in business, and that we have responsibility as the leaders of business to do that.
Let me ask you a different question, and this goes to the issue of size. You talked about size. I wrote a book called Too Big to Fail, and one of the things I worry about today is something that I call too big to manage. That some of these institutions just fundamentally, if you're the CEO, it's hard to know what's happening 2 floors below you, let alone what's going on in other continents. There's a lot of creativity that clearly happens at the entrepreneurial level. You see a Kenny Dichter walk up on stage and tell you these stories, and it's remarkable stuff. At larger corporations, it becomes harder. Most companies do 1 or 2 or maybe 3 things really, really well, but that's about it. And to the extent that they continue on, they buy other creative things. What would you do with a Google? Would you break up a Google right now?
I think Google is a great example of the opposite. I mean, Google has a side, half the business, which generates huge profits and incredible growth on a quarterly basis that really satisfies and rewards their investors. Half of that business is invested in the future in ways that few of us in this room understand. I have the opportunity to have some insights into that, but their investment in R&D and the future is quite remarkable, and their lack of limitations in terms of their P&L and their quarterly returns in order to be able to do that, to invest in things like driverless cars or robotics. They bought like 10 of the most important robotics companies in the world in the last year. Nobody knew it. Why? Well, nobody's focused on robotics yet. But in the next couple of years, when they do, where is all that IP? Where is all that talent? A lot of it's going to be at Google. The opportunity to do that is quite remarkable. I think Jeff Bezos does the same thing. Jeff Bezos constantly sort of doesn't ask permission, but asks forgiveness of the marketplace as he invests in satisfying customers and moving into more and more interesting businesses. These are dynamic individuals who continue to keep their companies alive.
So you like that size. Some people call those monopolies, by the way, but you like that size. You know, and I'll ask Meredith, banks. Are banks particularly creative?
Financial institutions have historically been creative when you had monoline institutions. And you know, there's a great article on Tom Honig in the New York Times today, and it talks about, I'm sorry, it might be the other newspaper. It talks about him being this big hawk for banks and large institutions, when in reality he's saying that when the US institutions were at their finest, they were smaller, very focused institutions, and this is before universal banking, when you had one size fits all. So it's not a question of what size you are, it's how good you are at what you're doing. And so the difference between the large institutions and what were the same institutions smaller was just one thing, which was leverage. So I think that you have an issue of, none of this matters if you allow business to operate on its own, because you have this great market mechanism called creative destruction that weeds out sort of the old, tired institutions that are no longer, ready for prime time, so to speak, because they're no longer innovative, they're no longer competitive, and you allow new institutions to emerge. What happened with the financial crisis is you emboldened those large, very broken institutions to get larger and to really become fixtures in the system. And now they're bleeding because they can't cut costs fast enough with declining revenues. That is a very bad and very un-American result of what has, of the financial institution. So I don't think that the financial industry is reflective in any way of what is core to this country and what is core to commercialism in this country. And so I think, we talk about this, and you mentioned the divide between rich and poor. That's more of a construct of failed government policies than it is of basic business, because businesses succeed and die on their own merits.
So I want to bring up Google. There's plenty of history of large, profitable organizations devoting a great deal of resources and getting great results. Bell Labs is one. But there are also plenty of examples of large, profitable organizations devoting a lot of resources to new things and not getting a lot. One might think of Microsoft. And as an investor, one thing I remind people when they talk about Google is that if Google makes $1 today, proceeds to sit on it for a decade, and then give it to you in 10 years, that $1 is only worth 40 cents. And if Google has a lot of people running around doing inefficient things, which they may, I don't know what they're doing, but they're doing a lot, and some of it might actually do something, and some of it won't, and it's hard to judge from the outside. But I guess my point is that one of the things I really don't like about the Google share class structure, I recognize the idea that people want to be free to think long term, and my business is all about the premise of long term thinking. At the same time, though, at some point there has to actually be accountability, and if you're not accountable to shareholders, and you or Larry or Sergey, to whom exactly are you accountable? Society has sort of given you control over this vast amount of resources to do what? And while I recognize that if they're successful in developing the future, we're all going to be great, very happy and grateful. But what if they're not? What if these are really crummy ideas and just a lot of waste? And unfortunately, my experience with large organizations that are very profitable is that once organizations are freed, think about the US government at the extreme, once organizations are freed from the pressures of competition, there is a tendency towards lethargy, there's a tendency towards waste. And my guess is that there's lots of great stuff happening at Google, and there's lots of stuff that's, in 10 years we're going to think is a total waste. And which one's bigger, I don't know.
I wouldn't disagree with you. I can't imagine that they're spending all that money perfectly. But once again, they are creating an environment that allows them to pursue innovation at a level that probably no other company in the United States is pursuing today. Hopefully they're successful with it. No company has the right to endure. 20 years ago, the average company, I think, had a lifespan of 50 years. 30 years ago, it was 70 years. Now I think it's 17 years and getting shorter. The idea of creative destruction, which is my business is to destroy bad actors. That business is getting bigger while the legacy businesses are getting smaller. And so the opportunity to create new things in the wake that serve customers, that serve communities, that serve employees, that serve the stakeholders better, that's my job. And I think there's no better time to do it than right now.
Final question. When you think about these two words, art and commerce, people seem to like art right now. Everyone loves an artist. Commerce, less so. Not as popular. You don't
Never as
hear,
cool.
Excuse me?
Never as cool.
You don't hear politicians even use the word prosperity anymore. as a goal for the country. Given the balance that you clearly have in your book and both of your views, to the extent that the idea of prosperity and commerce, will commerce ever become a good word? Is there a way to make commerce a good word? Do you believe it ever really was a good word?
Yeah, I actually think it is a good word, and I think it is it's getting, it's denigrated.
And so what has to change?
I think it's denigrated in large part because it's associated with greed. And the reality is that commerce does not need to be associated with greed to be successful. Commerce doesn't have to be aggressive to be successful. We've kind of adopted that model that is the model of combativeness and competition, hyper-competition that operates in our economy. We're proud of that. It has delivered great material results. You could argue that it has caused a lot of problems in its wake. Commerce can be done differently. And as a result, I think to make commerce important, again, to make it a valued term, to hold our heads up high as sort of the people who have to take care of commerce and bring it forward, we have to bring values to it. We have to bring values to commerce. It can't simply be buying low and selling high. It can't be maximization. We have to take into account what we're doing and why we're doing it. That's got to be the important part of commerce.
I think, ironically, what we're seeing, and you're a fantastically well-evolved example of it, is you have evolved a brilliantly wonderful way to engage in commerce. And what you're doing, and it's great, is brutally competitive, incredibly maximizing, but it's about sort of the idea that, I don't think any successful business starts with the premise, over the long term, let's maximize profits. Successful businesses are all about delighting their stakeholders, all of them. And creating a culture where people who work at the business can reinvent it continuously. And so I don't think that there's ever been, I know there's examples of it, but I don't think the idea that greed in and of itself was the primary motivator of the business successes that we've had has ever been the case. And ironically, kind of taking that flag and championing it is a very skillful adaptation to be really greedy. Henry Ford made the car, right? And yes, he made fortunes, but if you read some of the stuff, he was interested in bringing transportation to every man. Just like Steve Jobs wanted to make a dent in the universe. The great success has always come from people who see more than just kind of buying some grain at a penny lower than the next price. And the great organizations always empower the people in them to feel like they can do more than just turn a wrench. And so I've never seen a contradiction. I just don't see it.
Final word to Meredith Whitney.
It is so hard to make a buck. So if you tell an entrepreneur that everybody gets a trophy, they'll probably knock you out, right? Like, you think about the great businessmen and business people in this country, and you think about what a knife fight they have every single day trying to be competitive. And a great American example right now is Kevin Plank, Under Armour, that he every day didn't look at just destroying Adidas and Nike. And it's not easy to do, to make a buck and to succeed in these things. And yeah, at the heart of it, you're trying to do something great, but let's not confuse it. It's a high-class problem if you're managing, making a buck, and trying to do something better for the environment. They peacefully coexist, but to diminish the idea and think that, everybody has the luxury to get out of bed and actually do something better for the world before they actually can afford to do so is a little bit of an overstatement.
We have to leave the conversation there. I want to thank this remarkable panel for some very provocative thoughts to kick off things this morning. Randy, Cliff, and Meredith. Thank you.